Millennial investors or anyone who's just starting out, still figuring out things in the stock market, this video is for you. This investing video is for all of the millennial investors out there. And let me tell you, I am one of the oldest millennials around, but I do fit into that millennial classification. So I am a millennial. I take a lot of pride being a millennial. I consider myself a successful millennial, a millennial who breaks that horrible stereotype out there where a lot of people, other generations, believe that millennials are lazy. And let me tell you, there are people out there who think millennial investors are wrong, they don't know what they're doing, they are misinformed, they're going nowhere. There are people out there who are making fun of millennial investors, who don't think millennial investors have a clue as to what they are doing. And I saw something on Twitter this morning that just really got me thinking. It just really came across the wrong way. And so I want to start with that today. I want to set the stage for today's video with this Twitter conversation, but I also want to plant the seed. I want to leave four names with you right now that I'm going to discuss throughout today's video that are going to add a lot of insight in today's video. So name number one is Carl Williams. Most people know him better as the man behind the Carl Kanai clothing line. So we'll talk about Carl Williams. I want to talk today about the rapper Big Pun, the late rapper Big Pun. I want to talk about the late rapper Tupac and also the late rapper Heavy D. So we're going to talk about those guys as we go through the video today. Let's get started with another video about dividend investing. All right, so I got my laptop here because I want to read through parts of this conversation that happened on Twitter earlier today. If you want to check it out, just go to my Twitter. I'll link in the description below. You can read the whole thing. But anyways, I love following economists, VCs, people on Twitter who are thought leaders who have data, because I love seeing data. Anyways, there was some really interesting data shared on Twitter today, and I thought it was just brilliant data, but at the same time, the way it was shared and the condescending attitude behind it was something that really, quite frankly, was a bit offensive to me because I know how many millennials are here on my channel. So anyways, let's talk about it. So the data really goes like this. There are institutions right now that own Tesla stock. And the data that was shared on Twitter, it basically shows that what's happening, potentially, our customers, millennials, are starting up Robinhood accounts, and they are buying Tesla shares in their Robinhood accounts. And quite frankly, a lot of these institutions, they are unloading their Tesla stock on these millennials who own Robinhood accounts. And what's happening is it says, speaking of Operation Fund to Baggy, they're calling these millennials baggies or bag holders. It appears we can watch it up close via Robinhood. If the average Tesla Robinhood account buys 50 shares, then the 55,000 increase in accounts from Q4 to Q1, it goes on, and it basically speaks that some of these millennials who own Robinhood accounts or have opened Robinhood accounts, they're buying Tesla stock and they're becoming baggies or bag holders. So that alone I kind of found a little bit offensive, just calling these people bag holders. A lot of these people who are opening up Robinhood accounts, they're investing for the first time. They're just trying to figure things out. And quite frankly, they're trying to better themselves. They're trying to better themselves in their financial future, and they're taking that first step. And look, maybe they are making a mistake buying Tesla stock. Maybe Tesla stock is not the right thing. Maybe it is a mistake. That being said, look, everyone makes mistakes, especially when they start out. I certainly did when I got started with investing. Anyways, I want to go on. So then there was another person in the VC community who chimed in on this thread, and this would actually got to me a little bit more because it was not only calling them bag holders, but almost relishing a little bit in the fact that they are bag holders. And it just said, millennials ages 20 to 33, at most age 1 through 14 during the 00.com crash, or age 9 through 22 in the 08 crisis, are liquidity providing bag holding buyers for institutional sellers. And then it says, bless them. And so basically what's happening on Twitter is this venture capitalist is saying, bless these millennials for being bag holders, for being liquidity for these institutions. And now, obviously, I think the data behind this is really interesting, and the thought process and the discussion and the debate, it is really interesting. But what really gets me is why would you say something like that? Bless these millennials for being bag holders. You know, a lot of these people, they're just getting started out. They're investing for the first time. They're trying to figure things out. Maybe they're buying Tesla stock. Maybe they're buying some other high-flying stock that may go down. But again, why would you relish in that? Maybe they are making a mistake, maybe they're not. I think the premise here is a lot of these people are making mistakes buying Tesla stock at these levels. And but nonetheless, why would you relish that in someone else's challenge? The way I equate this is kind of like shaming someone at the gym. Let's say there's someone at the gym who might be in not the best shape. Maybe they have a few pounds that they need to lose. Maybe they have a lot of pounds that they need to lose, but you know what? They're showing up at the gym, they're putting in the work, they're trying to better themselves. That's how I also look at these people on Robinhood who are starting out. Maybe they're buying Tesla stock without doing the full due diligence that they should have done, but they're learning as they go. And so why would you shame someone for trying to better themselves? And conversely, what I would say, what I think the proper response is like, hey, millennials, you might be making a mistake. Here's some data that I have. Here's what's happening with institutions. Here's what's happening on Robinhood. I want to share this data with you because I know you're newer to investing. You may benefit from this data. And so, quite frankly, I love the data. I think it's there, but I think the attitude towards the data has to change. It has to change. And it has to be more towards just empowering everyone, educating people. That's what I'm trying to do on my channel here. I know I'm not perfect, but I do my best to educate, to empower, to share knowledge out there. And I think other people who are leaders, quote unquote leaders, people in high places of position like venture capitalists, why wouldn't you want what's best for other people out there trying to improve themselves? Anyways, my rant for the day. But I want to draw some takeaways from this because I think there's a lot of good takeaways. Takeaway number one. There's so many finance channels out there. They're praising XYZ famous investor. They're praising XYZ investor who is in the media a lot. And they're like, wow, these people are great. I should follow their every move. They're so impressive. They're so cool. And so my takeaway is be very careful who you follow. Be very careful who you follow and how much weight you place in them. And so I like to follow all the people on Twitter, especially these thought leaders, because like I said, maybe they're not being sensitive enough or looking at it the right way, but you know what? They are bringing really cool data to the table, and this data is valuable, and it's good for them for sharing this data with the community. But look, I am very careful who I praise. I'm very careful who I follow, and I'll tell you, would I rather sit down for dinner with Warren Buffett? Is that one of my life goals, for example? No. My life goal, or one of my life goals, the kind of people that I praise, that I look up to, quite frankly, are people like Carl Williams. Check him out on Wikipedia. He founded the fashion brand Karl Kani, and that's what I'm wearing today. These are the people I look up to. And so a lot of people on YouTube, a lot of investors, in my opinion, they're looking up to certain people, but just be very careful who you look up to. If you follow Karl Kani's story, or Carl Williams' story, he has gone through so many challenges in the early days of his business, and now he has one of the most successful fashion, especially 90s inspired fashion lines in the world. I read online that his net worth is somewhere in the range of $150 million. Just a fascinating story, incredible quality clothing that really was part of the hip-hop movement of the 1990s. He really clothed all of these hip-hop greats, and to this day, his label is producing amazing fashions, but it was not always so easy for him. In fact, in his early days, it was very challenging, and the reason that he labeled his brand Karl Kani is he was literally asking himself, can I do it? Can I do this? And so, one, be careful who you look up to, but two, you may be asking yourself this question, can I do this? Look, you can do this. You got this. You can do this. You can become a great investor, even if you're just starting out right now or you're partially through your journey. You got a ways to go. Look, I got a ways to go. I live in the expensive Bay Area. I want to live off of dividends. I got a lot of dividends coming in, but it's going to take a lot more. And sometimes I ask myself, Ian, can you do it? I'm like Carl, asking myself, Ian, can you do this? Yes, I can do this. Yes, I can do it. And I know I can do it because there are other people out there. There are greats. There are people like Carl Kanai who did this. And another way I look at this is Big Pun, the late rapper Big Pun. Awesome rapper. He had a song, You Came Up. And basically it's about the come up. This is a concept in hip hop culture of making it, of coming from the streets and making it, turning yourself into something. And sometimes on the come up, it's interesting because it's not like you're there yet, but you're about to explode. You're about to make it. You're going to make it big. And that's the way I look at this channel. This is the way I look at our 25,000 subscribers here on the PPC Ian channel is we're going to make it. We're going to make it big. We're about to blow up here. And that is the way I look at it. I take inspiration from different avenues. I don't take inspiration from some of these finance greats, although I love the data that they share, but just another interesting concept. And so I want to take some more takeaways from this. If you're a millennial, if you're feeling discouraged, maybe it's just other people like water cooler talk. Why are you investing in dividends? What are you doing in dividends? Or you're never going to make money in the stock market. Stock market's already gone up a lot. You know what? You just got to filter out the noise. And so that's why I created this community. I created this community so like-minded investors can come together. We can support each other. We can make it together. We can be big. We can blow up. We can have massive wealth, massive success together. And quite frankly, we can give back. We can share with the younger generations what we learned, the mistakes we made, the pitfalls that we made, so that everyone can benefit from that data rather than poking fun at people who are just starting out and trying to better themselves. So one other takeaway is proceed with caution. Quite frankly, the data is interesting. If you are out there on Robinhood and you're buying certain stocks in this market, or you're on any platform, you're buying stocks in this market, look, it's hard to find value in this market. This market right now is very richly valued. I'm having trouble finding value. The stock market is at all-time highs. It's very expensive. The metrics are just... I'll talk about them here on my channel all the time. The dividend yields are low. The PEs are high. The growth rates, quite frankly, are not that impressive. A lot of these companies benefited just from one-time tax reform, which quite frankly could get eliminated in the future, and that's going to put a lot of these companies in an awkward position. And so I like to have my eyes wide open. I like to proceed with caution. And so whereas the message came a weird way, I think it is a good message that, look, if for millennials or really for anyone out there just getting started in the stock market or even seasoned in the stock market like myself, we should always proceed with caution. We should always be humble. We should always be careful what's really going on behind the scenes and what are the institutions doing? What are the institutions trying to do? Are they playing games? Are they trying to offload their shares? What are they doing? I think all of that is good information. At the end of the day, I just shared in my last video my performance, and a lot of people are asking, but Ian, how does that compare to the S&P 500? I did that analysis, and I'm going to share that with you guys in the next video. And I think you'll be pleasantly surprised to see the results. They're really good. And I've been doing this for a really long time. And so at the end of the day, one of the messages I want to share with everyone is just prove them wrong. Look, there's always going to be people out there hating on you, saying this or that. Prove them wrong. Look, short-term investing, growth investing, I don't know about that. But what I do know about is long-term dividend growth investing. I'm really good at it. The numbers speak for themselves. The results speak for themselves. I'll link in the description below to my last video, but stay tuned for my next video. My next video, I'm actually going to compare my results versus the S&P 500 so that you can see how did Ian do? How has he done versus the S&P 500? I think you're really going to like that video. It's really cool, and I believe I've proven them wrong, and I will continue to prove them wrong because I've found a strategy that works, and I'm in it for the long run. I just buy dividend stocks, buy and hold forever, live off of the cash flow, enjoy the growing streams of dividends, and I'm in this forever. And that's a differentiator. If I were in this just for a few years, who knows what would happen? We could be towards a market top, but I'm always averaging in. I actually do think the crash is coming, by the way. I'm always averaging in, averaging down, averaging up, accumulating assets that spin off cash flow that I can use to live. And so let's just all prove I'm wrong. And while we're at it, let's support this community on PPC Ian, but let's also It's funny. I had lunch yesterday, lunch with a subscriber. Boy, this is awesome. Scott, thank you. Actually, it wasn't lunch. We had coffee, but we were at Starbucks, Santana Row. In terms of full disclosure, I am long Starbucks, ticker symbol SBUX. I own that one in my personal stock portfolio. Anyways, we were talking. We were wondering, a lot of these investors on YouTube, they're actually paying money to YouTubers for their courses, and we were talking like about that, and it was interesting because the way we were thinking is like it's interesting that a lot of investors, they're starting to do that, pay for these courses, but they're not subscribing as much, or at least they don't talk as much about traditional subscriptions, like things like Morningstar or things of that nature. These same investors, they might not be paying for those services, and we were like kind of wondering why. But it makes sense because a lot of the support network, a lot of the YouTubers out there, they're like me. They're younger, they're talking about what they're going through, they are being honest, they're being forthright, and quite frankly, a lot of them have the best interests of their subscribers at heart. And so I just want to give a shout out to just a few of the YouTubers out there who are in this clique, they're just rugged investors. They're interesting, great people. And I want to talk about Steven Spicer at Spicer Capital. I want to talk about Brandon Beavis at Brandon Beavis Investing. I want to talk about my friend Dividend Grinder, grinding out those dividends, working hard to get those dividends coming in his direction, living off cash flow. I want to talk about my friend Marco over from Whiteboard Finance. These are just a few of the people that are in our community here. Now, some of them offer courses, some of them don't. I don't offer a course. I'm just sharing all my content here on YouTube for free. And but it's all good. I mean, what it really comes down to is, in my opinion, this is the clique. There are others, and I'm so sorry if I'm leaving you out. There's another, Jason Fever. He's not a YouTuber, but Mr. Free at 33.com. Love this guy, amazing inspiration. Anyways, these are the people. This is the support network. This is the support network. These are the investors for people who are on the come up. Like me, like all of us here, we're trying to make it big. We're about to blow up. And so anyways, before we leave today, two more things. There are two more people I wanted to mention. Tupac, I ain't mad at you, and Heavy D, I got nothing but love for you. And so at the end of the day, look, I don't want to preach too much. I'm not a perfect person. You know how many mistakes I make on a day-to-day basis? Tremendous amount of mistakes. It is by God's grace that I make it through all of this stuff. And so I understand, like, look, I don't want to preach too much. These people on Twitter that I'm talking about, that I responded to on Twitter, look, I got nothing but love for them. And quite frankly, I am so thrilled that they share this data, that they start this conversation. They are great people just for doing that. And look, I don't agree with how the data was positioned, but look, I make mistakes too, and so and maybe in different areas of life and whatnot, and so I ain't mad at you. I got nothing but love for you. Anyways, this is Thug Life Investing here, everyone. This is PPC Ian. Dividend investing for everyone. Dividend investors supporting other dividend investors. Just wanted to go on a rant today, share some of my wisdom with all of you, my hip-hop wisdom with all of you today, and I just hope you have a great day and you keep at it. Don't get discouraged. That would be my main message. And keeping at it, by the way, doesn't always mean buying stocks. Sometimes it means just saving up cash and waiting for good buying opportunities. But keeping at it in terms of keeping the eyes open and looking at the big picture, that financial freedom picture and the personal finance picture. And at the end of the day, I love platforms like Robinhood. I don't use Robinhood personally, yet at least, but I love these platforms because they've opened doors. They've opened doors for a whole generation of investors to start dabbling in personal finance and figure out which investing strategy makes sense for them. Everyone, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my journey here on YouTube for fun and entertainment. In terms of a full disclosure, I am long Starbucks, ticker symbol SBUX. Scott had a lot of fun with you yesterday grabbing coffee at Starbucks talking about stocks. All right, everyone, I'll see you in the next dividend investing video.